Foreclosures, distressed properties, what does it all mean? Are you interested in this topic? If so, stick with me on today's video because I'm going to be breaking down the 4 stages of foreclosure in the state of California. Now, the first thing I want to say is in every state, the foreclosure process is a little bit different. So I'm going to be speaking about today, particularly the state of California. All right. And there's 4 basic stages of foreclosure in the state of California. And the first, I'm going to break down each one. It starts with the notice of default stage. Then it goes to notice of trustee sale stage. Then there's the actual trustee sale, the auction of the property. And then if the property does not sell at the auction, it goes back to the bank, which is the 4th stage of foreclosure called REO, real estate owned by the bank. All right. My name is Steve Peterson. Welcome to our channel. I hope this helps you out because we always talk about commercial real estate and investment properties. And in 2025, the big topic right now is distressed properties because all throughout our state and also all throughout the country, we're seeing a big uptick in distress. Now, it's nothing close to what we saw in 2008, 2009, but it is the most foreclosures that we've seen recently by far. All right. So it makes sense. And what I noticed, talking to a lot of agents, talking to a lot of investors, talking to a lot of property owners, most people do not understand the basic elements, particularly these 4 different stages. So I'm going to break this down right now. So in California, the process starts with what's called notice of default. All right. So if you own a property, you get behind on a mortgage or the mortgage becomes mature. What does that mean? The date, the term of the loan is up. The loan is mature. Now the lender is expecting to get paid back in full. They're not just wanting the payment. They're wanting the whole principal balance to be paid off. So either you get behind on several payments or the mortgage becomes mature. That creates an event of default. And typically the lender, the bank, the lender, they will send you letters. They're not going to just immediately file notice of default. They're going to send you some warning letters. Typically, if you're 30 days late, 60 days late, they'll send it to you. If you're 30 days beyond maturity, they'll send you a letter. But at some point, they're going to file the notice of default. Now, this is notice of default, aka NOD, also known as pre-foreclosure. All right. This is when the lender files the notice with the county. And then there is a 90-day cure period. So there's 90 days before the lender can move it on to the next stage. And in this period of time, this 90-day window is the time for the borrower to figure out a game plan. So if you're in this position, the clock has begun, but you still got time. You still got time to figure out the next step. All right. And there's a few options of what you can do. A few things that, depending on if you're a homeowner or commercial property owner, investment property owner, either one, you could work with your existing lender to modify the loan. That is typically where they'll reduce the interest rates. They're not doing a lot of loan mods right now. They did a lot of them back in the day, but you can ask for a forbearance plan where they'll take either a portion of what you owe, put it on the back end of the loan, or they'll take what you owe and break it down over payments. And you could potentially work something out with the lender. If you're going to try this, you want to get going ASAP. And in fact, you want to try to work something out with the lender before they file default. Now, it could come to a point where you might have to sell the property. So this is time when you want to start thinking about that because you have time, 90 days before they file the trustee sale and before they move it from notice of default to the next stage, notice of trustee sale. So it's within this period of time, this NOD stage where you as the property owner have a great opportunity to be able to figure something out. Also, if you're somebody who's looking to try to make deals, this is a great time to work with the property owner to get the property sold to where they could most likely get something out of the sale before they lose it all. All right. So this is a great stage to be able to try to figure things out, whether you're the owner or whether you're someone that wants to buy properties. Also, as a professional, real estate professionals, this is a great time to reach out to people because they have time to sell their property. All right. So that's the first stage, notice of default. And once it gets filed, it's public record. And there's 90 days, a minimum, state of California, 90 days from the day they file it to the day that they can move it to the next stage, stage number 2, notice of trustee sale. So after that 90 days is up, now the lender can take it to the next level. Now it gets a lot more serious because the lender can now file notice of trustee sale, NTS, also known as notice of sale. Now, once this is filed, a trustee sale date is scheduled. The auction is scheduled once this is filed. However, a minimum of 25 days, it must be more than 25 days or longer from the day they file it. So it can be more than 25 days. It cannot be less than 25 days, state of California. So once the lender files that notice of trustee sale, now it's serious. All right. This is serious now, because if something don't happen in this next 25 days, then the lender is going to auction the property off. So if you are in this position, this is time for you to really, really get serious about getting something done. All right. Now, typically most lenders, once the property reaches this phase, they're not going to be so interested in working out a forbearance or loan modification or some sort of workout plan, because they've escalated it to this point. They just want to get paid. Right now, if it's mature, it's a maturity default. Remember, they don't only want to just get paid the back payments. They want to get paid the whole amount. So it becomes pretty challenging, right? And if you are going to sell a property and you thought you have equity and you've tried a bunch of things, now is the time to really work to get this thing sold. As brokers, what we've been able to do a lot of times for clients is get a listing agreement, get it on the market. We have the borrowers hire us on their behalf and give us authorization to talk to the lender on their behalf. And what we'll do immediately is send the listing agreement, send the posting of the listing to the lender, say, wait a minute, we're going to get this property sold. Give us an extra 30 to 60 days. Please postpone this trustee sale. Depending on the lender, depending on the circumstances, generally they'll work with us, right? If they know that we're going to get the property sold, most lenders, especially banks. Now, there's all kind of different lenders, all right? Banks are different from mortgage lenders, or mortgage banks are different from hard money lenders. And the biggest difference is the regulations that they have. Banks have particular regulations. When they take back a property, they have to set aside a certain amount of money, a certain amount of funds for each one of those properties. Banks, when they take a property back, it's kind of like a black eye on their, bank credit score, so to speak. So banks are really typically the most easier to work with when it comes to, figuring something out in your foreclosure situation. Hard money, private money, probably the most difficult to work with when it comes to this, because they don't have the regulation. They can take this property back, no problem. They're not getting hit on their hard money credit score. And in fact, some of them are set up to take properties back, so that they have the internal mechanisms to manage property and own and operate property, whereas banks do not. So depending on who your lender is will kind of affect how they work with you in this notice of trustee sale phase. But it gets really serious at this point. And if you're a seller, you want to work to do everything you do to try to postpone this, to try to figure out how you get this thing paid off. If you're a buyer and you're coming in at this stage, you typically need to have cash, private money, or you need to be able to act quick. A lot of buyers have been able to do subject to transactions where they come in and they bring the mortgage current, get the seller some money, and they take over that existing mortgage. They take over the existing deed subject to the existing mortgage, right? But either way it goes, a lot of deal making happens in this stage, but you got to have cash. You got to have finance, quick hard money financing, or you got to be able to put together a creative finance deal very quick, but it requires the lender to get paid off, in terms of them getting their back payments. If it's a maturity default, you can't do a subject to deal because the lender wants all of the money, right? So understand who the lender is, who you're dealing with, no matter what side you're on. And I'm trying to do this video from general. So if you're a seller or owner of property, or you're a buyer, if you're a professional, this should be able to help everybody, because we need to get more proficient in this. We absolutely do. All right. And in this notice of trustee sale phase, this is when people got to wake up. A lot of times when you're going through default, and I've gone through this. Look, I started my company in 2009, and I lived through 2008 and 2009 as a broker, as an investor. So this process can get very stressful. And what happens is when you get stressed, you're going through this, sometimes you got the blinders on. You can't really see straight. You can't really think straight. All right. And it really helps to get a professional in your corner who can help you out. That's why I think brokers, qualified brokers and agents who know how to work these kind of properties can help walk you through this, this process. If you're absolutely dead set on keeping the property, you need to get some kind of advisor. You need to get housing counseling. If it's your home, if it's a commercial investment property, you need to get an attorney. If you say, hey, look, I just cannot sell this property, I have to hold on to it, you need to get some advice. Don't go through this alone. And don't be ashamed, because look, a bunch of big old companies are going through this. If you can look at any major downtown area, particularly in California, but any city, big companies with billions of dollars are going through this right now, right? So don't be ashamed. Don't, just get the help you need, but figure out how to navigate, because the notice of trustee sale phase, very important. Because if you don't figure nothing out in this 25-day time frame, then it moves to the next stage, which is, this is the ruthless stage, man. This is the it is what it is stage at this point. It's called trustee sale, AKA the auction, the county steps. 35, 45, 55, you better have a cashier's check if you want to buy one of properties like this. Very difficult, by the way, to buy properties at this stage, in the sense of, if you're not set up to buy properties like this on a regular basis, if you being an individual trying to step up to the plate to buy, very difficult, because you don't get clean title when you buy at the courthouse steps. All right. And you have to bring cash. You have to show them a cashier's check, and you have to be able to close cash. You're not getting financing. There's ways that, if you're part of an investment group or whatever, you can finance it if you will. But when you at the steps, you have to show them cash, and they're going to start at what their opening bid is. There's a published bid when they first file the auction, and then they can drop that, by the way. So if you're tracking this, the published bid, the opening bid is not necessarily what the published bid is. They can change it anytime they want. And if they really want to sell it at the courthouse steps, which most banks do, then they're going to drop it to a price they think it'll sell at that point in time. And then when you go to the auction, if you go to the auction, you're trying to bid on these assets, you got to be prepared to at least show that minimum amount, right? And then they're going to, but it's not an ideal time to buy, because it's an auction. You know what I mean? And there's typically groups in any county, city, area, but the county is who administer these sales in California. There's groups, well-organized groups at the steps. They know the properties. This is what they do every day. They've done their general research. So it's difficult if you're just a novice investor that you're coming up and trying to buy at the steps. If you're going to buy at the steps, you really need to know what you're doing. And it's not something that we advise. We're not brokering deals at the courthouse steps. But if that's something you want to do, you got to align yourself with a professional that does that. Now, if the property gets sold to what's called a third party, someone who bids, now that property is their property. Now they got to go and, deal with the title situation, because they don't get title insurance at close of escrow, at that close, right? At that auction, right? It's not an escrow. It's a little bit different. However, if the property does not sell at the auction, and this is happening a lot right now, then the property enters into the fourth stage of foreclosure, which is called REO. Real estate owned by the lender, by the bank, by the lender, because now it's their asset. All right. And now what they're going to do is they're going to list it with the broker and put it on the market. Typically. Now that's if it's residential. If it's residential, for surely they have 3 or 4 brokers they get the file. It's going to go to one of those brokers they assign it to. They're going to go through a process, put it on the market. If it's a Fannie Mae property, I think it's Fannie Mae, Freddie Mac, or FHA, it has to be offered to homeowners for the first, I want to say 25 to 30 days. I know there's been some changes within those dates, but there's a period of time where those kind of properties have to be, if they're residential, have to be offered to homeowners first. And then everyone else can go and offer it. If it's commercial property, the process is different, right? First of all, there's not any offering up to homeowners. Anybody can buy it. But you can buy commercial properties in REO stage prior to them going to the market. Because, I've done this on behalf of clients. I've done this as an investor, where you just track a property. Once it goes back, you can make offer directly to the bank. And at that point, the bank just wants to get this thing sold. So if you can negotiate something where it makes sense for them, they'll take it. If they're looking at you and say, hey, look, if I list this with XYZ broker who's on our team and we work with them, I have a belief that we can get more than you're offering, then they're going to go that route. But you could potentially offer that, and you could potentially work with an agent who, tracks deals like we do and makes offers directly to the lenders that way. And then obviously once they put it on the market forces are going to dictate, what the price is going to be in a market like we're in right now, where properties are sitting, days on market, even for residential, are increasing, right? prices are being dropped on a regular basis. It's harder to sell properties. Lenders generally are motivated to sell, right? So they're going to, be a little bit more flexible than a typical seller. And this is going to represent a good acquisition opportunity for buyers. Now, as brokers in our office right now, we're working on all these different stages. We have an REO properties for sale. We have properties that are in notice of trustees stage. We have properties that are in notice of default. We have a couple properties that we're working on that are short sales. So we work with this stuff in all facets, whether you're a property owner, a property, you're looking to buy more property. You want to work with people like us because this is what we do. Now, you also need to know and understand this process. So that's why I did this video. When I started in the business, I started my company in 2009. So many people, it was a flood. It was thousands of foreclosures. And so many people didn't know how to work them. And like this thing called short sales, I'm going to do a whole nother video on short sales, was really big at that point in time, but nobody really knew how to work it, right? And so what I'm wanting to do is just provide some information to people, whether you are in this situation as an owner, and knowing the process can help you to make some moves while you're in there. If you're a buyer saying, hey, I want to buy, but I can't buy for market price with these interest rates. I have to buy some kind of at a discount. This is a way, knowing these processes, a way you can buy at a discount, but not just buy at a discount. You can actually solve problems for people. And this is what I think gets lost in the sauce. You don't have to be a wolf over here to make money. You can actually solve problems for people, put some money in people's pocket, help them to move on with their life and get a great deal at the same time. And that's what we're here to help facilitate during this period of time of transition. It's difficult. We're here to help. There's a lot of other brokers who have been through this as well that can help you. And, there's a lot of other professionals. The bottom line, if you're going through this as a seller, don't go through it alone. Get some help, get some professionals with you. And if you're going through it as a buyer, understand the process, understand what value you can bring to the transaction, and go make it work. And I hope this is helpful. To the next video. Peace.